Hi everyone, JR with Secure Metals with a quick look at the gold and silver market. Today is Tuesday, June 11th, 2013, and it is 4:31 p.m. Eastern Standard Time. This is your daily gold chart here. Now, we did have a failed attempt here to surpass here this 38% Fibonacci retracement at 1424. We saw a May low at May 20th. We did see a low here hitting roughly 1340. This was after we came back down from the 61% Fibonacci retracement. Again, I actually predicted a move to at least 1425, but again, sometimes the 61% Fibonacci retracement will throw you right back down, and that's what it did. Now, the metal did seem to find support here, roughly at around 1350, 1314. Since then, we have tried to come up to the 38% fib level again, but we did fail to continue to go over this level. And as of right now, we just came under the 23% Fibonacci retracement at 1385. And currently, we did test the 1360 level, but again, I think this is very clear triangle that we're trading in. As of now, we definitely don't want to fall below this 1339 level. We want to stay above this level because, again, we do see a little bit of support here. We have this trend line here. Again, we are trading within this triangle range, so I would expect to test this 1423 level here pretty soon, as so long as this 20-day moving average doesn't continue to push us down. Now, the one thing here that I do like about this metal is that if you notice the Bollinger Bands, and I've talked about this before, anytime these Bollinger Bands begin to merge, kind of like what they did here, notice that when prices move fast, these Bollinger Bands, which is the purple and the gray area, these Bollinger Bands, anytime they contract or anytime they merge like this, usually we're waiting for some sort of breakout. And we can clearly see this when we see these bands come together like they did here, and then you had the breakdown, and of course vice versa over here where they came together, and of course you saw the breakout to the top, and over here we saw this again over here. So plenty of examples, but what we're seeing now is again the merging of these Bollinger Bands again. Now the bottom of the Bollinger Band right now is at 1360. And the top is roughly at around 1418. Now, we do see a little bit of a pattern here. I'll pull up the 4-hour chart here. Let me delete some of these things here to get a clear view. Okay, and as of now, we are seeing, we see a high here. We see another high here, and we saw another high here. This is actually not that bad because, again, we have created higher highs and, of course, lower lows. I'm sorry, higher lows. Now, if this breaks here, then, of course, we're looking to test the 1350 range. And, of course, if it goes below this technical level here, of course, if it goes under this technical level here, then, of course, that can signal that this low higher than this one is going to fail, and of course we'd look to test this previous low again. Most likely, if it does break though, I would expect lower prices. I would probably expect the metal to come down to at least this level here, 1307 or the low 13s, and most likely come down to this level, roughly the 2070 range. Now, the good thing about these prices here, if they do come down, if you understand the way monetary policies work, and obviously 85 billion into the economy, Europe is printing, Japan is printing, every nation right now, every developed nation right now is printing money. And really what I see is a trend where they are trying to fix all the issues that we have with government debt. So if you believe that government debt creates inflation, and obviously if you believe that a weak dollar creates higher prices, then of course you want to continue to purchase here. As of now, again, we do want to make sure that we do want to keep a very close eye on this and see if this 1350 level is going to hold. But I do like the fact that, again, we saw this low here, we saw a higher low here, and right now we just want to see if we're going to continue this trend, because if that's the case, again, I think what we'll see is we'll see a move up to around 1440, and I've already drawn this line here. So we would look to, I'm sorry, not 1540, to roughly around 1500, okay? So if this low holds and we can create a higher low than this one, then we'd look to create a higher high and come over here. Of course, we do have this band that we do have to get away with. But again, like I said, your Bollinger Bands right now are contracting, which does signal a breakout. The question is, where is this breakout going to come? Now, stochastics are pointing lower, so we might see the prices come down here and test this lower band at the 1360 level, possibly even the 38% Fibonacci retracement from actually a long-term Fibonacci retracement at 1354. So again, surpassing this line here would most likely signal much higher prices, roughly in the 1500s, and possibly even this Fibonacci retracement at 1570. But we do have this line that we do need to worry about before we start getting too excited. So roughly, I would think that once we do get above this line here, once we do hover above this line, we would look to test this 100-day moving average roughly at the low 1500s, maybe around 1520, 1530. Okay, so again, your moving averages as of now, they are above us, not too positive. We do want to get over those moving averages, especially this 20-day moving average. But again, we are looking to build some sort of breakout, and we're looking to break out on the right direction here. Again, stochastics are pointing lower, so still a little bit of room here, but again, we at this point is really just a matter of time. Now, we did see a sell-off on Friday. We saw the market have actually, like always, we had some positive news for the metals. But of course, with this crazy market, we did see a dip in this market here, okay? Now, on the silver chart, I love the silver chart right now. I think the silver chart really, really, really looks attractive. This is your silver chart here. And I'm going to do some long-term analysis here. And this is your weekly chart. Let me clean this up a bit. So this is very interesting. Really, silver is at a crossroads. I mean, at this point, I see the metal going to either 1950, okay, or I'm seeing this metal going to $25. So anytime you're trading, anytime you're placing bets, you want to do your risk versus reward. So if you buy here roughly at 21.65 where we currently are, what you want to do is you want to put a stop loss here somewhere around the 18 level, maybe the 18 and a half, maybe the 17.50. And of course, we're looking to take this thing to at least $25, $26. So, but an interesting formation that I noticed here the other day, actually it was yesterday morning. This is what we saw back in 2006. We saw a high. So we saw this metal rally from roughly from $7 all the way up to $14, which was roughly $113% move to the upside. Then we traded sideways and we saw another move to the upside. And of course, we peaked at roughly 21.24. Actually, the peak was high was 21.36. All right. Now, after we saw this high, we saw the 2008 crash or the 2008 Great Recession. And what we also saw is we saw the metals take a big dive, just like the Dow did. And we saw the dive was roughly a 59% move to the downside. So from $21, came down here to $8.45. And we missed this high. Now this is where it gets interesting here. The support was found at the March of 2004 high. So when you saw this March 2004 high, this is, again, remember, anytime we surpass a resistance, it becomes support. And this line was acting as support. And of course, we did find support in the 2008 recession at the 2004 March high. So again, this was a move that occurred between here and here. It was a move that lasted roughly 3 years. And if we do the math from here to here, this is a move that also lasted 3.5 years. So it's very interesting how these things are coming together in a very similar fashion. So again, from here to here, we saw 3 years. From here to here, we saw 3 years also. Now, where it really gets interesting is right now we are at the point where we were in 2008, where where silver in 2008 came down roughly 59%, 59.41. And currently, this metal has retraced roughly 59.43. So this could be, if these technicals play out, which again, when you have government printing money like crazy, God knows what can happen. But again, these technical analyses are really a study of probability, and really we study the past to make future predictions, or at least have an idea of what this market is thinking. But again, we saw the drop very similar to the drop that we saw here, and currently we are being held at the 2008 high, which was roughly $21.36. As of now, the low is $21.41. Now, the difference is roughly a 5-cent difference. And if you look here, if you look down here, this is where we saw the low. The low was $8.67. The high was $8.40 over here. So again, it was about a 15-cent difference. 15 cents difference, and currently right now we are testing this 2008 high. So very interesting. It could be we could see this metal really take off from here, similar to what we saw over here. That would be awesome if we can see that. And really, this is what it did. This is what the metal did. It took off, and it really never came back. Once it surpassed the previous high, it just took off like a monster. And this could be the case. And now remember, the gold, the folks that don't really get the inflationary, or maybe that don't really get the psychology of inflation and how it works, remember, any time the metals decline, that's when the bubble bursts. And I remember when I first got in this business in 2007, I remember in 2008 wondering if I was in the right business, wondering if I was in the right sector, because the bubble, according to the mainstream media, had burst. The gold bubble was done, and that's it. This market was going to die. And here we have the same situation, and where again you hear a lot of mainstream sources say that this is a gold and the gold has no intrinsic value. Apparently these guys don't have a clue of what intrinsic means. But more so, again, I really like this trade here. You can actually have two trades where you can buy here a smaller trade and put a stop loss around $18. Try to take this back up to $25. I also want to point out that on the let me delete here. That on the RSI, what it does is, this is the RSI down here, and what this does is it measures how oversold or how overbought something is. When something's overbought, then you don't necessarily want to continue to buy it, you want to sell it. And when something's oversold, you don't want to continue to sell, you want to actually buy. So we saw this metal when it was back in 2004, it was overbought here, tremendously overbought. And obviously we did see a dip. It was overbought tremendously here again. And obviously we saw the dip again here, and of course again here. And for the first time in a very long time, we've actually seen this metal very, very, very oversold. Right now we are at a actually the RSI is at 22% right now. So again, this is extremely oversold. If you look through history, you'll see that this has never been this oversold. I wouldn't say never, but at least as far as this chart goes, which is back to 2004 or early 2000 and actually late 2003 or middle 2003. So again, this could be a phenomenal opportunity right here for this metal to turn around. At this point, I'd like to see how it's going to play out. But again, the metals are they are currently being very well supported. And the one thing that I do like about this chart here is that, again, we did see that big drop on Friday, and yet the Bollinger Bands stayed put. They didn't expand. If you would have seen an expansion where, again, this Bollinger Band goes up kind of like this, when this market just went down right here back in March of 2013, where you saw this Bollinger Band contract here, it merged, and then you just had the big sell-off. And of course, once you have the sell-off, or once you have the rally, usually what happens is the Bollinger Bands begin to expand. So as prices could go in one direction, the Bollinger Band, the opposite side, will go to the opposite direction. So I'm happy to see that on Friday we didn't see these Bollinger Bands begin to expand. They're actually still contracting here. And I also like the fact that as of now, we actually have a bullish divergence where this price is going, where this is going down and this is going slightly up. So again, this does not mean that the metals have reached the bottom, but it does signal that we might have some a floor in place. But again, only time will tell at this point. Again, very, very, very oversold. I like buying silver here, being very cautious here and trying to take this thing up to 25, 26. Of course, long term, I see the exact same pattern that we saw here, where again, we fell below this. This here was a very key level here, was a big key level, the 1626 level, and of course the previous highs at the previous 2007 highs, roughly at around 1436. Those were very key, very important key levels as well, and it broke down. One would have assumed that the market was over, the rally was over, but of course that wasn't the case at all. And what we ended up doing was continuing to rally. Again, guys, government is out of control right now. We're stimulating more than ever, so there's really no reason to suggest that the market is going to continue to decline and commodities are going to continue to lose value forever. Remember, the Fed is printing to fight deflation, not to create deflation. So if you ask me, I think Bernanke is going to continue to print money. I think the fact that the bond markets right now are a little shaky, the stock market, let's look at the Dow Jones chart here. Let's look at let me finish the silver analysis. So again, as of now, let's see here. So as of now, the weekly chart, the stochastics are beginning to move a little bit higher, but again, they look a bit like they're trying to make up their minds. This big tail here, again, that was during the supposed flash crash that we saw a few weeks ago, and ultimately we do have a little bit of a bullish divergence here. Okay, so a move below $21 would be not positive at all. A move below $21 would most likely signal lower prices. It would most likely signal a move to at least $19.50 if this $21 area does not hold. I would look to find support at around $19.50. Again, risk versus reward. You got about a $2.50. You got about a $2 risk, and you have about a $5. Actually, on a long-term basis, you have about a $30 or $40 move to the upside, just risking $3 or $4. On a short-term move, again, you have at least $4 move to the upside here before this metals continues to go in whichever direction is going to go here in the near term. But ultimately, I do expect prices to continue to go much higher within the next 3 to 6 months, possibly even longer, maybe 10 months. But again, beautiful opportunity. I really, really, really like this metal here at this level. And again, you can make a very short, again, in my opinion, you can make a very quick trade here where, again, you put a stop loss at around $21 and see if you can take this thing up to at least 23, 24, 25 bucks. So you're only really risking 60 or 70, 80 cents for a quick move to the upside. Again, if you get stopped out, of course, hopefully you didn't have all your money in that one basket. But ultimately, long term, I do like the idea of buying all around this area here and looking to take medium profits here over here and obviously continuing to go higher. But again, this really looks like a picture exactly the way we saw. This really looked like the 2008 picture where we saw the market really did do things that really didn't really make too much sense. So again, we did see this move come down here very, very hard, and now we're continuing to move higher. Now the Dow Jones now, again, very shaky market. Really, this Dow Jones really just moves based on what people think Bernanke is gonna do. So I'd be very skeptical. And if you are big time, if you're heavily invested in equities, I would very much reconsider all my positions if I were you. And the reason why is because, again, you don't always have to chase the market, guys. You can sit on the sidelines for a bit and wait for this thing to wait for whatever is going to happen. You have absolutely no growth. The stock market is rallying with, I have no idea why. Why? Because the stimulus. Banks are using our money, right? The money that you deposit in the banks. Not only do we have a fractional reserve system, where these banks can use 90% of the funds that you have in the account, but now the money that they're getting from the Federal Reserve, they're using this money instead of loaning it out to businesses to create jobs and so on. What they're doing is they're speculating back into the stock market. And again, the bond market right now is in a lot of trouble, and really, you should be very well diversified. 15%, 20% during inflationary periods. You should have it in gold and silver. I would reduce my exposure to equities at this point, and also have some cash in hand, because this is really unprecedented. And what's happening now, it's really foggy. Doesn't really make a lot of sense. And again, you do want to be very, very, very careful. Again, this is a broadening formation. I've shown this before. I'll show it again here. This is what happens with these broadening formations. I just showed it a few weeks ago here. And this is a broadening formation here where you have higher highs and you have lower lows. And usually when you peak, this is what happens. You just have a huge tank. You just have a huge move to the downside. Also, again, these formations are very bearish. I actually heard an analyst, I forget the gentleman's name. He said that the Dow Jones can fall down to between 5,000 and 3,000. People were calling him crazy, but again, when you look at this formation, it's not crazy to think that the Dow Jones can do this. And again, it is a very bearish formation. This is called a broadening formation. Look it up online. Very bearish, and I can't be the only one that's really noticing this. So if that was the case, we would have to create a new low, maybe 6,000. And again, if it goes off this chart here, it'll probably go to maybe 5,000 or maybe even 4,000. But again, very careful out there. If you follow the laws, 15%, 20% in precious metals, reduce your exposure here to these equities, because again, this is a no growth economic environment, and there's really no reason for this market to continue to rally the way it has been rallying. All right. And that's about it, guys. Guys, I hope you enjoyed the video. Thanks for watching. Thanks for joining me, and we'll see you next time. Bye-bye.